Hi, Stephen Barrett here. Today I want to talk to you about how to go about getting a mortgage. It's not like during the Celtic Tiger when you just had to fill out a form and the bank gave you what you wanted. You have to go through quite a process. So I'm going to break this up into three different sections. The central bank rules, the bank rules, and then tips on what you need to do to have a smooth process in getting your mortgage. So I'm going to start off today with the central bank rules.
Okay, central bank rules. Why did they introduce them in the first place? The reason is the central bank don't trust the banks. They said so in their paper when they introduced these rules, that although the banks are very stringent on their lending patterns at the moment, or criteria at the moment, they don't trust them to continue to do so. The central bank want to avoid having a property crash like we had in the past, when people just simply couldn't afford to live and pay their mortgage, and we had all these defaults. And in a country where repossession is still quite rare, the central bank want to avoid that altogether. So what are the criteria that the central bank have introduced? The first is your loan to value rule. What is the value of your debt compared to the value of the property that you have? In simple terms, how much of a deposit do you need? You need a 20% deposit to purchase a house these days. There is slight relief for first-time buyers in that you need 10% deposit for the first 220,000 and a 20% deposit for anything over that. So how does this work? If you 350,000 purchase, you need 48,000 deposit. That's 22,000 on the first 220,000, 26,000 on the remaining 130,000. So a total of 48,000. 15% of loans may be exempted from this, so you need smaller deposit. This is done on a case-by-case basis, and it's very stringent, so you need to have a very good application in place to have a lower amount deposit. The next one is your loan to income rule. So what the size of the loan as a multiple of your salary. Mortgage given is limited to 3.5 times salary. Now that is a combined salary, so it's not just for one of you. %20 of all loans issued can be more than 3.5 times salary. Again, you need to have a very strong application. You need to be on good salaries, in good occupations, good savings patterns to get this exemption. The third and final rule is the buy-to-let rule. So this is if you're buying investment property. What are the rules? Again, the central bank don't want people with multiple investment properties that they can't pay for. So a deposit of 30% is required. So it's an even bigger obligation. You have to provide a fairly big deposit if you want to purchase an investment property. You're not allowed. The banks at the moment won't allow people releasing equity from their own homes. So you're going to have 30% in savings. Again, 10% of loans may be exempted. Again, it has to be a very strong case. So those are the central bank rules. For the moment, we will go through the next YouTube video that I produce. It will be on what are the bank rules and what you need to do to satisfy them. If you have any questions, my website's at the bottom there, bluewaterfp.ie, or you can give me a call on 01485 3305. I look forward to talking to you soon. Bye.